Hello and greetings everyone. I hope everybody's having a fantastic day today. Crypto has been absolutely kicking the door wide open on the second day of this new year. It's been a while since we had double-digit positive green numbers. We are up 12.3%. We had a total market cap of 1.76 trillion. We haven't seen these numbers in a very, very long time. Bitcoin is up 45,700. Ethereum is above 2,400. Solana flipped Binance again, and the market is just going wild. It's green. Congratulations to all of you crypto enthusiasts that made it out of the bear market, stuck with it, and just endured the beating and the pain and the cold. And here we are now entering summer. This year is going to bring us amazing results, and it's just great to see how we kickstart this year today. Of course, all this is also still in anticipation of the ETFs that are about to get approved. All the excitement about the Bitcoin halving, cutting of the interest rates. 2024 has so many catalysts that we're about to experience, and everything is just working and coming together in 2024. Exciting times for us that are in the crypto space, have been in the crypto space throughout the bear market. We are being rewarded this year with great catalysts and great momentum that we kickstarting and that we started the 2024 year with. So with that said, today's message actually that I want to look at is the narrative of 2024 will be community. Community-driven projects will be the narrative, because the reason why I'm saying this, with all of us anticipating the ETFs to be approved, of course, this also comes with a lot of changes that we'll experience in this space. And we need to be aware of this. And one of the major changes is centralization. So crypto, as we know, won't be the same again, because of course a lot of liquidity is about to enter the space, a lot of volume is about to enter the space, but a lot of centralization is also about to get into the space. A lot of regulation, and that is a good thing, is also about to enter the space, and we need that. But staying with the centralization part of it is that the whole essence of Bitcoin was to stay away from all the centralized entities, for being dominated by centralization. This is why in 2008, after the financial crisis, Bitcoin was developed to really give retail an opportunity to be part of a community that is out of reach of centralized institutions, that we as a community can really rally behind this vision, this new cutting edge technology, and have the first dip into it before these large institutions and Wall Street gets their claws on it. Unfortunately, with the ETFs approval coming in, and unofficially as they're not being approved yet, we have lost Bitcoin to the hands of Wall Street, and our crypto won't be the same as we know it. Unfortunately, let me be the first to say that, because there'll be a lot of centralization around it, and whoever controls the cash flow in and out of Bitcoin controls Bitcoin. This is what this video is all about. Let's jump right into it. So everything was triggered by BlackRock filing in for a spot Bitcoin ETF back in June, and they also announced that they will be using Coinbase as their custodian. This choice was easy because Coinbase already had brokered MicroStrategy in their very first Bitcoin purchase back in 2020, 3 years ago. This, of course, put Coinbase on the map. It was a public relations stunt for them, and it put Coinbase on the map. All this, of course, was done over the counter. This is how these large institutions purchase their Bitcoin. It's over the counter, of course, because the lack of liquidity in regular exchanges where retailers purchase their Bitcoin from, or other cryptocurrencies for that matter. So all this was, of course, amazing because it made Armstrong to be able to boast and claim bragging rights in the market as the one that helped a publicly listed company take a 9-figure leap of faith on Bitcoin as a reserve asset. So all this didn't go unnoticed, of course, because MicroStrategy, they kept buying even more. They just bought a couple days ago 615 million more Bitcoin. And with that, their stock has been up over 300% in 2023 alone. BlackRock took notes of all of this and their need of being part of a cutting edge technology of a new emerging market. In BlackRock fashion, they always like to dominate and have a large chunk of any emerging market or any emerging commodity or asset. And this is exactly what they're doing. So with the spot Bitcoin ETF application, it put BlackRock on the map. It was an easy choice to go with Coinbase. And also what we need to note here is that with that, it puts Coinbase in a position of dominance as far as Bitcoin ETF services are concerned, custodial services. Majority of the ETF applicants will all be going with Coinbase, of course. and the list is long. So as of now, 9 out of 12 prospective issuers opted to go with Coinbase as their custodian. As you see here, Coinbase is really dominating. Grayscale, ARK, and 21 shares. BlackRock, obviously, Bitwise, WisdomTree, Invesco, Galaxy, Valkyra, Global X, and Franklin Templeton will be going with Coinbase. Hashdex have not made up their mind yet, but most likely they'll also go with Coinbase. Fidelity, because they have been mining Bitcoin on their own since 2014, they're having self-custody, and Fanek is the only one that opted with Gemini. With all that said, with the final SEC filing, BlackRock chose JP Morgan to be the authorized participants. What is an authorized participant, and what does this mean? Because BlackRock is not legally allowed to purchase the cryptocurrency itself, the asset manager teamed up with JP Morgan and quantitative trading firm Jane Street to assist them in purchasing. Of course, because BlackRock named JP Morgan as their authorized participant, this had a backlash and they were criticized due to that. So let's look further. Authorized participants. Many players help support the mechanism that enables ETFs to operate efficiently. We examined two institutions. So there's authorized participants and market makers. Now let's understand how BlackRock, JP Morgan, and Coinbase are really about to dominate and take control of the logistics and liquidity of Bitcoin. Whoever controls the logistics and liquidity of Bitcoin coming in and out of it, they'll win. So anyway, an AP, authorized participant, is a financial institution, often a bank, dynamically manages the creation and redemption of ETF shares in the primary market. And their goal is to keep the price aligned with the underlying asset. So the ETF's price is pegged to the underlying asset, which is Bitcoin. AP's responsibility is to ensure that they keep the prices the same. So as the price goes up, they sell more. And as the price goes down, they issue more. An AP has an agreement with the ETF issuer, which in this case is BlackRock, that gives it the right to create and redeem ETF shares. But APs may act on their own behalf or on behalf of the market participants. And examples are, of course, JP Morgan. These are APs, authorized participants. Now, let's look at market maker. A market maker regularly provides two-sided buy and sell quotes to clients on the exchange. Market makers are key liquidity providers in the ETF ecosystem that ensures continuous and efficient ETF trading in the secondary market. Okay, now the role of market maker is distinct from a role as an AP, though both are necessary for robust ETF trading activity. Now, a market maker does not need to be an AP, nor does an AP need to be a market maker. Still, some firms play both roles. And guess which firm plays both roles? JP Morgan and Jane Street. So these play both roles they are both an AP, authorized participants, meaning they are the ones that can buy and they're the ones that are dictating how much shares are being flooded into the market or taken out. Plus, they're the ones providing liquidity as well. They're in charge of the liquidity, ensuring the buy and sell side are matched. So this is how BlackRock, JP Morgan, and Coinbase are going to dominate the logistics, the liquidity, and the accessibility of Bitcoin. So keep in mind, these two, Coinbase and JP Morgan's relationship, are intact. They have a great working relationship. Coinbase will continue banking with JP Morgan, of course. So rising regulatory scrutiny isn't coming between Coinbase and one of its banking partners, JP Morgan. So JP Morgan and Coinbase have a great working relationship. They have a strategic partnership. Also keep in mind that BlackRock has an existing strategic partnership with Coinbase as well. So these three are in strategic partnerships amongst themselves. JP Morgan has strategic partnership with Coinbase, BlackRock has strategic partnership with Coinbase, and of course BlackRock also has a strategic partnership with JP Morgan, as we just discussed, as they appointed them as the authorized participants. So all these three are in strategic partnerships together with the sole mission to control the liquidity, the custodian, and the accessibility to Bitcoin. And whoever controls that controls the asset. That's just the way it works. I know there'll be a lot of arguments, oh, you can't control Bitcoin, you can't. Yes, you can. And this is exactly how they're controlling it. They're controlling the custody of it, the liquidity of it, and the accessibility to it. And this is why a lot of speculations are like BlackRock will be the first one to ETF to be approved. And we'll see how all this plays out. And another notable aspect of it is because you see all these large asset managers all opting for Coinbase. There's a reason why. They really want to ensure that there is centralized dominance and that the competition is completely wiped out and that they can take full control of the custody, logistics, and accessibility to Bitcoin. And whoever does that. One thing I also want to highlight is that the ability to exchange the ETFs for either cash or underlying asset provides economic incentives for market makers to trade when the price deviates from the value of the underlying assets. So this self-policing mechanism, keep in mind, this is the key. They'll be self-policing themselves. This is not a regulated space. They'll be self-policing themselves to ensure the exchange price does not materially deviate from the values of the fund's asset. So here we have the largest asset manager, the largest bank, and the largest Bitcoin custodian, all in strategic partnerships, dominating the liquidity, custodian, and access to Bitcoin through these ETFs. They are self-policing themselves using a self-policing mechanism to ensure that the prices does not materially deviate. And then how are they making money? APs and market makers have an economic incentive to take advantage of arbitrage opportunities in the market. This involves trading the ETF shares or underlying securities when there are small price differences between the two. So obviously they have economic incentives to do that. And if the AP and the market maker is the same, as we saw here, it will be JP Morgan and Jane Street. So the AP and the market maker is the same company, and they're the ones incentivized economically to take advantage of arbitrage. And we know how Wall Street loves to take advantage of arbitrages. They're all about hedging, shorting companies, and all that. So this is why I'm saying that with this ETF approval, yes, there'll be more liquidity in the market. There'll be a lot of volume coming in, institutional adoption. However, unfortunately, Bitcoin will be more centralized now, and it will be in the hands of Wall Street. Again, keep in mind that a separate primary market involves large institutions, authorized participants, transacting with ETF issuers to create or redeem ETF shares based on market demand. So large institutions, market participants, JP Morgan in this case, and BlackRock is the ETF issuer. They have their primary market and where they create or redeem shares based on market demand. Individuals, investors, do not participate in the primary market. So this shows you that they're the ones making the rule, setting the pace, controlling the in and out flows, and whatever they decide will come to the secondary market. So this is something that you really need to pay attention to and understand that this is why we say Bitcoin, once the ETFs are approved, will be in full control of Wall Street. Now, this is why at the beginning of this video, I mentioned that the future are community projects, community tokens. This is the year of community projects because communities are the ones that are shifting the narrative. They're the ones that are moving the markets. Let's look at two examples on Solana and on Ethereum. Let's start with Solana. On Solana, since the beginning of the year, Solana jumped over 800%. And in the last 3 weeks alone, it jumped more than half of that. What was the catalyst behind it? Community tokens. Like traders earned significant amounts on Solana. And this was due to community tokens. You see here how since the beginning of December, monthly activity and new addresses on Solana have reached yearly highs amid rising Solana prices. So what was behind the rise in Solana prices? On December 24th, the token rose to $118 for the first time since April 2022. And at the time of writing, the asset is up over 890% for the year, according to CoinMarketCap. Now, we understand that in December, there were already several cases of rapid enrichment thanks to new tokens. Last week, a known user purchased one of these community tokens for $400 and made $2 million. Another trader earned $1.5 million on community tokens on Solana network. So all these new tokens caused a lot of trading volume and a lot of anticipation. This brought monthly activity on new addresses on Solana, and it reached new highs due to this. And it also pushed Solana price up. This is due to the community tokens that entered the space. Now, another one on Ethereum is the most famous one, of course, the Pepe coin. What did it do? Not only did this token cause inventors to bow down to FOMO, fear of missing out, but the demand for the token caused a surge in Ethereum's gas fees. So the gas fees of this popular network has reached a one-year high due to increased transactions to buy Pepe. Similar to the Ethereum platform, where many community tokens caused Solana price to just skyrocket and many new addresses were formed and reached all-time highs. Similar things happened on Ethereum. To put it even more in perspective, Pepe's trade volume on Uniswap has topped 150 million over 24 hours, outpacing wrapped Bitcoin and USDT stablecoin levels. This community token hit 500 million in market cap within weeks, and this broke it into the top 100 currencies. The project got even closer to 1 billion market cap valuation, but it peaked at close to 2 billion. So Ethereum witnessed increased burns due to a community token. As a result, more Ethereum were destroyed on the network as activity rose. So this is just to show you the power of community tokens and how community tokens are moving blockchains, let alone ecosystems and tokens. So this is the year of community tokens. 2024 will be driven and dominated by community tokens, because Bitcoin, once the ETFs are approved, Bitcoin will be in the hands of the big players, Wall Street. They'll be dominating the liquidity, accessibility, and also the custodian part of it. And you might ask yourself, well, what do you mean with accessibility? As we know, JP Morgan is known for banning crypto payments. We all know about this, how JP Morgan likes to freeze accounts if you are involved with crypto payments. JP Morgan Chase UK earlier this week put out a notice to customers saying it will no longer allow its customers to purchase cryptocurrency using its debit card through bank transfers. The bank cited concerns over the risk of fraud to its customers from cryptocurrency, citing data showing that fraud related to digital currencies has been on the rise. So JP Morgan Chase is famously known to control or to restrict accessibility. So if you have JP Morgan, who's controlling the accessibility to the funds, and they are the ones in charge of liquidity, they are the APs and the market makers, and have an economic incentive to take advantage of arbitrage opportunities, they are the ones who act as market makers as well. They are the ones that play a key role in providing liquidity. This is why we're saying that once these ETFs are approved, it will be in the hands of Wall Street. They're the market makers. They're the authorized participants. So this is why we say Bitcoin is compromised, and this will cause a lot of crypto natives who believe in true decentralization to opt for community tokens. And this is why I'm saying that this year will be the year of community tokens. So you want to be part of communities that are original, that have original tokens. We developed, under the Bull Run ecosystem, we developed the only token that is fully dedicated to the queens out here, to the women that are underrepresented in this crypto space. You need originality. And besides originality, you need to also check for security and decentralization. So how is it secure? The contract has been renounced. Liquidity has been locked for 100 years. All the supply has been put in the liquidity pool. It has a 1% burn mechanism, so it's deflationary. There are no team tokens. There was no pre-sale, whitelist, initial coin offerings, none of that. This token is completely community driven and decentralized. These are the types of projects that are very appealing and will be dominating this year due to the fact that retailers will want to have full control. They want to be their own bank, and they want to have full custody of their assets. And with JP Morgan putting out notices to customers saying it will no longer allow its customers to purchase cryptocurrencies using its debit cards or through bank transfers, this will push investors to want to learn how to do DeFi, how to have your own wallet, how to have full control of your custody, because that's the only way you'll be able to have cryptocurrency. Because the same institution that puts out notices to no longer allow their clients to purchase cryptocurrencies using their debit cards and bank transfers is the same institution that BlackRock appointed to be the authorized participant. Retailers, we are on for a treat this year in a negative way. So we need to learn how to use decentralized exchanges. We need to learn how to open our decentralized wallets and be our own custodians to avoid all this. Community tokens will play a major and vital role. And that's why I'm saying community tokens that are active, vibrant, original, and especially deflationary, and has a lot to offer to the community. tokens that retain liquidity, so you are not the exit liquidity, that is deflationary and scarce, by banning tokens. We started with 1 million in total supply. If we look at Etherscan, we went from 1 million initially to now down to 973,000. So we banned way over 26,000 tokens. And this token is scarce. So you want to be in a project that there's scarcity, there's retention of liquidity for you, and that you receive incentives through staking. We have a dual staking platform where you can stake your tokens and you have the USDC distributions, and you can also purchase our utility NFTs that boost your distributions. And the revenue generated from these NFTs will be added into the liquidity, allowing these projects to be healthy in liquidity. So these community tokens will be the most sought after tokens in the space. And this is what 2024 will be all about. It will be all about community tokens. And as we've seen it before, it's community tokens that caused monthly activities and new addresses on Solana to reach new highs and also rise the Solana price. Same thing on Ethereum as well. It's a community token that spiked Ethereum gas price, caused Ethereum to destroy a lot of tokens on their network based on their network activity. And it's the same community token that caused on Uniswap, a decentralized exchange, have a volume of 150 million in 24 hours, outpacing Wrapped Bitcoin and USDT stablecoin levels. Wrapped Bitcoin. Bitcoin is the largest cryptocurrency, obviously, and USDT is the largest stablecoin. So how can a community token outpace based on daily volume and reaching levels of these trading volumes in a day? So I rest my case. 2024 will be community tokens driven, and you need to be part of a community. And this year, let's make it count, because 2024, everything is falling in line perfectly. Bitcoin halving is ahead of us. Interest rate cuts are ahead of us. ETF approvals are ahead of us. And all these things are coming together. A lot of volume and liquidity is about to enter the space. This will be a massive wealth generating event that you don't want to miss out on. And as we know, low market caps, vibrant communities, those are the blueprints to a successful bull run cycle. Don't miss this out, because we just came out of a bear market and we are just entering into a bull market. The market is buzzing, is hyped. Social platforms are all about cryptocurrency. The cryptocurrency interest is hitting social media platforms. As institutions are gearing up to enter the space, retailers who control the market are also gaining more interest and are jumping on. And they'll be looking for strong communities that are enthusiastic, that have strong fundamentals, and that have both utilities and the right community that is vibrant, active, and has strong narratives to push forward. In our ecosystem, like I said, we have a token fully dedicated to women. It's an original token with a great narrative behind it and a great community. We have a whales dedicated token as well. And if you aim to be a whale, this is your token. And then we have the original bull run token as well. So we have the narrative, we have the platform, we have the right ecosystem, and we have the right community, and we develop our own tokens within our own ecosystem. So with that said, community, keep that in mind. 2024 narrative will be community driven, as it always does. So make sure you're ready, you're prepared, you're with the right community that will work together to make 2024 count. This is it for today, community. I wish everybody a wonderful rest of your day. Again, Happy New Year to all of you. Let's start this new year with the right mindset, and let's make this 2024 count. Let's make this bull run cycle count. With that said, I want to wish everybody a wonderful rest of the day, and let's keep in touch.